Happy Saturday, everybody, and welcome to another edition of Stock Reviews. Today, we're going to be going over a stock that I personally have been involved with for probably about 2 years now. I got in very, very early. I saw Roku kind of as a Netflix type situation where it's kind of in a space that's kind of new and growing. And as you saw during the pandemic, if you were paying attention to streaming at all, you were definitely noticing that the people moving from traditional cable to streaming just continues to be a big wave, huge momentum shift towards streaming being the kind of go-to platform. So I thought it was a good time to dig into Roku, which is the number one player in that space. They actually own, I think it's about 30 to 35% market share. And then they have competitors, obviously like Fire TV and Apple, but they lead the pack. They are the number one market share in that space. So they're overlooked a little bit because a lot of the bigger players, have these streaming tools and these devices, but they just can't seem to stack up to Roku for whatever reason. They might not be spending a lot of money in that area. They may be focused elsewhere, but Roku has really taken a dominant position. So that's why I wanted to go ahead and jump into this one. And just really quickly before we jump into some of the numbers, I always let you know what my position is, or if I don't have a position, I let you know. So with Roku, I actually owned it. I initially bought it about a year and a half to 2 years ago. I think it was about 120, 130. And I bought a little bit as in the early days of the pandemic as well. I ended up, the all-time high was hit, I believe, in either end of January or beginning of February. It was about $470 was the all-time high. I did not sell there. I waited it out a little bit. We ended up getting a correction, and I ended up selling around the $400 mark. So I did book. My average cost rose a little bit when I made some additional buys, but I did book about a $280 per share profit. Once that happened, once I was able to take profit, we were in the middle of kind of that correction that tech got, and it fell all the way down to about, I believe it lost almost 30%. It was down to like 295, I think was the lowest it got. It might have gotten a couple bucks below that, but that's about where it bottomed out. And I actually bought back in at 299. So that's where I am right now. I have a position with an average cost basis of $299, and it's been over the last 10 days or so. It's moved about, as you can see here on the screen. It closed out Friday down a bit, but it's really added about 75, 80 bucks a share in the last 10 days. So the good thing with Roku is when it moves fast, but the bad thing with Roku is when it falls fast. It's one of those story stocks. It's one of those growth stocks. So the one thing that you have to be mindful of is those treasury yields. As those rise, the growth stocks typically take a hit. Roku already did take a hit and was repriced from 460 down to about 300. And then as you can see now, yields are kind of slowing down a bit, and they actually pulled back to about 1.55 from a high of, I believe it got close to 1.8 at its high. So you can see when those yields are down, there's a little pressure off some of these growth names. So with that being said, let's jump into some of the more heavy, kind of the heavier details, deeper details, heavier investment research, and let's go. So first off, let's start with the market share. I think I mentioned in the beginning, but Roku has the number one market share in the streaming marketplace. So they have, I think, over the pandemic, throughout the pandemic, they crossed over 51 million active users on their platform. And one of the nice things about Roku is even though they are in the streaming space and they're compared to other streaming services like Apple TV or Amazon TV, who don't have as big of a market share as them, they do something a little different than these streaming only or content only providers like Netflix, for example. Netflix is on Roku's platform. So realistically, they're not competitors. Roku really works with these content creators. And the benefit for both of them is Roku has this huge depository of content that it houses all your favorite streaming apps, including HBO Max, including Netflix, including Hulu, Amazon Prime, anything you can think of. For the most part, it's on Roku's platform. And in addition to that, they have their own channel called the Roku channel that they're working on building out. They actually bought Quibi, which was a kind of a concept type content creation platform. It was short form creation, so it's like 6 to 10 minute videos. It was supposed to be short enough that you could watch on a commute to work, if you're taking the train or you're waiting at a doctor's office, really like a brief kind of content. But anyway, it was something that Roku bought along with, I don't know, some of you guys might not remember. I'm a little bit of a boomer here, but some of the older guys will remember that This Old House. So they ended up buying the This Old House franchise, which was a show that was a lot more popular back when I was younger, but it's still pretty popular today. It's gone through some renovations, but basically it does the content's really geared toward like DIY, do it yourself, building at home, remodeling, things like that. So around the house, handyman type of things. But anyway, that just goes to show you that Roku, as they've said on their last few earnings calls, is that they want to build out their Roku channel as well to kind of have the best of both worlds, where they have a Roku channel, which is like a Netflix, but also they have the Roku platform that houses all these other content creators or aggregators, and then charges them a cut every time someone buys a subscription through the platform. So, for example, if I buy a Netflix subscription through Roku's platform, it's going to be the same cost, but Roku gets 20% of that subscription for the life of the subscription. So that's very attractive. So, something to keep in mind there. Just going through some of the things that they've been doing, over the last few months have been great as far as content acquisitions like the ones I just mentioned. And then also, this is the one that I really think is going to be a game changer for Roku, is Nielsen, which is a company that a lot of you guys may or may not have heard of, but you've definitely been part of their, I shouldn't say part of their, but you've definitely used their products or seen their products before. Essentially, they have been a long time marketing and data analytics type firm for streaming and cable TV. And they actually have now an exclusive partnership with Roku to measure streaming kind of data and analytics as a whole. And in exchange, Roku has purchased their advertising business so that they could have more targeted ads on their platform. And one of the conversations that has been happening is that in the industry, Roku boasts the best ad kind of, let me make sure I say this right. They give the advertiser the best bang for their buck by advertising through Roku's platform. The reach and the ROI of advertising on Roku has been shown through data to be better than a lot of other sources, including cable TV. So that's another really, really big thing that I'm basically watching for when they kind of introduce those. And I know, for example, one of the things that will be a part of that advertising platform is these kind of TV pop-ups that come up with products, and you can actually click a button and you can buy that product or add it to your, whatever it is. Let's just use Amazon Prime cart. You can add it to your Amazon Prime cart just by clicking the remote control, and then it takes the person, to the checkout page, or it puts it in their cart and they can go check out later, whatever it is. But that's something that people in the market are very excited about. I've seen a lot of high volume option or high option volume in the call space. So people are betting that Roku's price is going to go up in the near future. And I think that is one of the big reasons, because the argument is always made with me when it comes to Roku is that, oh, it's a stay-at-home stock, so it's definitely going to take a big hit as, people go back to work and less people are watching or streaming TV. And I understand that argument, but there's two things that I always come back with. The first one is it's not really a stay-at-home stock because they need advertising dollars, and that's how they make their money. They also get these subscription cuts as well, but the advertising money is really their number one, revenue source. So for them, when the pandemic hit, advertising declined by it was 50 or 60%. It was something insane. So now that the advertising dollars are coming back and they have this new product that apparently is, very good at targeting and finding the right audience for these ads, I think they're going to be the benefit of that. They're going to see the benefit of that. So definitely don't see it as a stay-at-home stock. But second of all, just because people are going back to work doesn't mean they're not going to come home and stream. I mean, also there's going to be this hybrid or full-time work from home model that we've seen. Some people may never be going back to the office, and even though they might be working from home, people still throw on the TV in the background, and this I think is right up that plays right into that alley. So all things to keep in mind. A lot of information. And again, one of the big things that I always like to say again in regards to the competition is that they really don't compete with the big content houses. They really don't compete with Netflix, Hulu, HBO. They actually are partnered with them, and they get paid every time they, like I said, they get paid every time they sell a subscription on their site. So that's great. Provides a chance to basically pack your platform with content for free, and you're getting a cut. I mean, it's genius. I really like what Roku has done. So anyway, let's go look at some visuals here. You can see on Friday, it had a little bit of a down day. Finished down about 3%. Nothing too crazy, down $12. But it had a really good week. So definitely go back and look at the week chart. So the one thing that I wanted to look at here on this site is that these are the last few years earnings calls, and we'll start at the bottom since that's 2017. But if you look at all those beats. They've been beating analysts best guesses for over 3 years. 1 year or 1 quarter in 2017, you can see that they missed, but that was in the early stages. That was a long time ago. So you can see that's something that you like to see. They're beating every time. And actually, their last earnings report was their best earnings report ever. They reported, you can see here, 49 cents per share on an estimate of minus 13 cents per share. So they beat by 53 cents. And they also beat on revenue, 649.9 million. They beat by 29 million. So Roku has made it a business of beating expectations. And you can say, well, everybody's beating right now in the market. And that is true. Everybody is beating in the market because we have this, unprecedented stimulus money coming in. We have unprecedented buying and cheap access to, access to cheap loans from the government. So it's not surprising this year to see a lot of beats, but they've been doing it for 3 years. So that's something that I like to point out. Here's another thing that I wanted to look at. We talked about it, but I wanted to visualize it for you. So this article, if you want to Google it, you could just take this title right here, throw it into Google, and you can read the full article. But basically, this article is talking about the big surge in option calls and, far out kind of price targets that are pretty high because of this new digital advertising program that they're building. So I did talk about it, but I'm just going to read you a line from it just so you can kind of understand a little bit more. So it says here, the new product is a video advertisement that will be sponsored by a brand and play on Roku's platform when a customer clicks a pop-up on their TV screen, according to the report. blah, blah, blah. Brands are reportedly being asked to pay in the low to mid six-figure range for the advertisement. The product is set to roll out in the second or third quarter of this year. So that's something that I'm really keeping an eye on. So if you're looking at, if you're someone who's playing options, I would be looking, to try to get one that expires a little bit farther out. You can see here some of the volume right here. I'm just going to read a couple of them, but I'm sure you can see them as well. But trader executed sweep of 406 Roku options with a 390 strike price on May 21st, $666,000 bullish bet. And then another 373 with a 390 strike price, $630,001, $620,000, $620, $550, et cetera, et cetera. So you can see there's a lot of people, a lot of institutional traders as well that are jumping into this and are expecting it to take off, in the near future. Now, one of the things that I want to say again, because it is very important, I don't want you to come back and leave a comment on the video and saying, oh man, I just bought into Roku and it's down $20 or $30. You got to be very careful right now with the yields. You got to keep an eye on those yields. And in my opinion, those yields can spike again up to 1.75, 2.0 by the end of the year. So that could put some pressure on Roku as well. So you got to be very careful. Maybe in my recommendation, if you can get it on a pullback or a dip down in like the 300 range, 250 to 300, I still think it's from a fundamental value, that's a little high, but I think for a story stock like this that dominates the space, and really doesn't have any big direct competitors that are relevant, outside of Apple and Amazon, who again, they don't really fund this area a lot. And they do not have the market share that Roku does. But anyway, just keep that in mind. Don't just jump into this stock because you see it moving and there's a lot of good news. There is a lot of good news around this stock right now, but just be careful. And if you do jump in, you could always set a stop loss. I'm a big fan of stop losses on stocks like these because, for example, I'm up about $75 a share on it right now, $76 a share. But I want to make sure that I locked in my profit. So I have my stop loss set around 340, 335, so that even if it, takes a tank, I'm still coming out ahead. So definitely something to keep in mind. With that being said, the price targets for Roku from analysts, I don't like to use this as the Bible because there's agendas all over the place. But the price targets, even for the bearish analysts, at the low end is 375, and for the bullish analysts on the other end, it's 675. So right now we're really trading on the low end of where analysts expect this to be in a year or two. They're really looking at the 500 to 600 range to be realistic. But there's a lot of things that have to go right with Roku. So far, everything has, and that's why they're where they are. But that doesn't mean that things can't go wrong in the future. So you just got to keep that in mind. That's the other, that's another thing that I wanted to mention as far as everything has gone right. Right now, they don't have a viable competitor, but that doesn't mean that somebody can't enter the space in the future. We already have, we had this wave of stocks that came onto the market that were content creation channels, outside of Netflix, which was a while ago, but then you had this year like Discovery, Paramount, or Viacom, I forget if they're under that one. What was the other one? Fubo TV. So a bunch of them went public this year, and it's hard to value them. And I wrote that down here as well, that I wanted to say it's really hard to value these stocks because we don't really know what's going to happen. But I think with the Roku situation, the best part about it is it's not just a content creation platform. It's an advertising platform as well. So for those other ones like Fubo TV, for example, is one that I'll use that's super overvalued, or it was before it got hit. But I still think it's probably overvalued, but I haven't checked it lately. But yeah, so I think those stocks are so overvalued because they're just content creation, whereas Roku realistically is secondary content creation, but first is a platform for advertising and for connecting apps with an audience. So that's some things to keep in mind. Another downside that I want to put in there is that they have a limited international presence. So that's something I'd like to see them step up. Right now, they have some smaller operations in other countries, but it's still pretty small. There is some talk that they are looking to expand internationally. I'll probably be looking at that on the next earnings call, so I'll keep you guys updated on that. But it's definitely something that's on the mind of, the leadership team. All right, so let's move on here. I already showed you that little chart with all the earnings beats, but just so you have a summary of it, analysts have revised their EPS estimates upward on Roku 11 times versus only one time downwards. So that just tells you, you're starting to see people flipping onto the believer side. You're seeing people, revise estimates up because you're seeing people realize all these advertising dollars are coming back as the economy reopens, and they want to they're going to be looking for the best bang for their buck, and it seems like Roku's that platform. So that's another thing I wanted to point out. As far as numbers goes, some of these numbers are things that people like to hear, so I want to put some of them out there. 4.38 million or 438 million in debt and 1.1 billion in cash on the books. So they're doing pretty well there. They're not overly leveraged. We talked about the bullish options volume. I think it's built around, the new targeted ad system. So I think that's going to be a big kind of home run play for them. And then last but not least, I wanted to, hold on one second here. I just wanted to show you the market share for Roku. So let me put this up here. So here's the so I was a little on the low end here, but they have 49% of the market. How crazy is that? Compared to some of these huge, massive competitors, they are somehow finding a way to own half of the market. Super, super, super hard to do against companies like, Amazon, Apple, and Google. So that right there alone, that picture, I think, speaks 1,000, this one picture speaks 1,000 words. It just shows you this little, it's not little anymore, but at the time, this little, regional player, I don't know if many people thought they would have been able to overtake all these big powerhouses. There's a lot of people that also say that Roku will get bought out by one of these competitors, but I don't know. I think Roku is in such a good space that they don't need to get bought out unless they see an opportunity to improve by combining with one of these companies. But either way, that would be a win for shareholders if someone like an Apple or Amazon ended up buying them anyway. So that's definitely something you want to keep in mind. Let's put that down here. And then one more thing I wanted to put in here. Just bear with me for 1 second. See if there it is. So sorry about that. Right here you can see. So this is basically talking about the market of smart TVs that are sold in the U.S. and in Canada. So if you go into a store now, you walk into your Target, you walk into your Walmart, you walk into wherever you're buying your TVs, you'll see almost all of them have a smart operating device inside them. In 2020, the data showed that Roku was in 38% of those TVs and 31% of them in Canada. So it is a massive, massive market right there. And they're the leader once again in that space. So they're beating out other operating systems like Google Chrome, Apple TV, Amazon Fire Stick or Fire TV. So that's another thing that I just thought was great to keep in mind. I think it's, once somebody buys a TV that has Roku installed on it, you're very likely to see them enter into that ecosystem and make purchases. Um, it's just like everywhere you look, there's good news for Roku. And I think that's why you're seeing a lot of analysts turn bullish on them. So let's just, again, just a quick wrap up. We talked about everything already, but let me just do a quick bullet point at the end here. So you got their last earnings. They reported 49 cents per share against a loss expectation of 13 cents a share. So they beat by 53 cents. Actually, it's a little bigger than that. It's more like 64. But anyway, 49 cents was earnings per share versus minus 13 estimate. And then they also put in 650 million in revenue the last quarter. So that's also something that you want to keep in mind. It beat consensus by 30 million. Their next earnings call is coming up, I believe, in May, early to mid-May. So I might go ahead and do another video before that just to give an update going into earnings. But other than that, I hope you guys have an awesome trading week, and I'll be back for my next video as soon as possible. And let me know in the comments if you have Roku or you're looking into buying Roku. If you have any questions on it, I've been in it for a long time and I have a lot of knowledge on it. So would be more than happy to answer any questions. All right, have a good weekend, and we'll see you guys next time.